back with another housing market update. This time we're going to be taking a look at the data through March 2026, which was released by Redfin last week. As we do on this channel, we take a look at rolling 3-month periods to help smooth out the data and see more effective trends, what's happening in different counties throughout the state of California. We're going to be focused again on median sale price. So we're also going to look at activity and available inventory. And the source, as always, is Redfin, and this is compiled and analyzed, as always, by the California Housing Collective. Let's dive in. So a quick overview of the counties in California. 35 of the 58 are now in a decline. It's about 2/3 of the counties, with 23 still increasing in value to some extent. And this is continuing a trend. About 3 months ago, we hit the 50-50 mark, where half the counties were growing, half the county values were decreasing. Now we're up to 2/3. So we're seeing more of the state in a state of decline when it comes to the median sale price. We're going to start off, as always, by focusing on the bottom 5 first to see where prices are falling the fastest. And we're going to kickstart with number 5, Alameda County, right here in the Bay Area. So Alameda County is down a little over 4% year over year, from $1,067,000 down to $1,022,000. And this is a really tough market if you are a fellow housing industry professional. If you do real estate, lending, if you're a contractor like myself, seeing red across the board is really tough. So as prices fall, typically the amount of homes sold goes up, because as prices fall, homes get more attractive, there's more activity on the market, and we're not seeing that. It's right across the board. Also, as available homes are falling, you typically see prices increase. We're not seeing that happen either. So you have a little bit of an anomalous data set here with Alameda, which is very tough. Prices are going down and inventory is shrinking, and the amount of homes that are being sold are going down as well. That's a really tough market out there in Alameda. We're going to take a look at number 4, a little bit further north in California at Butte, which is down 6.63% year over year. It's, again, a pretty big housing market with a little over 700 homes available in a given month, but incredibly priced. It's now down a shade under $400,000 for the median sale price. And this is a more typical data set. So the amount of homes going down and median price going down, so you're seeing more activity. Prices get more attractive, you see more homes being sold. We're going to take a look at number 3, Santa Barbara, down here in the Central Coast. These are high numbers, and this is starting to get a little crazy for Santa Barbara. Prices have fallen down pretty precipitously. So from over 1.2 million in a given month to a little bit under 1.1 now. Inventory is up, and the amount of homes sold is up as well. Both numbers there coming in over 7% growth year over year. And this is a really normal data set, but also these numbers are getting a little wild for Santa Barbara. So about a 10% drop in price, led by an increase in inventory. And as prices drop, the amount of homes sold naturally increases as well. So if you are looking for a place to buy, Santa Barbara is continuing to get more and more attractive as the price returns to a more normal historical valuation. Number 2 is Napa County. So first double-digit drop on the list from this data set. So almost $1 million last year to under $900,000 this year. That's a big drop. It is not explained by a change in inventory. So typically, if you see a large drop in price, it is accompanied by a pretty large increase in available homes, and you're just seeing a very modest increase of 1.62% year over year. But as your price drops, your amount of homes sold is growing. So if you're looking for a place to buy, Santa Barbara is representing better value, and so is Napa. If you are transacting or if you're a professional in the area, these are both really good markets because you're seeing more activity, even as prices go down. Number 1 on the list is Bloodbath. So mono, minus 23% growth year over year. And you might be surprised, right here in like the central Nevada border, it was over $1 million for the median price in 2025, and now it's dropped to under $800,000. So what is that total drop? $236,000 in 1 year, 23%. As horrifying as that number is, there's also a smaller amount of homes available. So a 14% drop in inventory and a 14.61% drop in homes sold. So prices are cratering, inventory is cratering. So if you're an industry pro in mono right now, we'd love to connect with you, and please reach out to us or join the wait list for the community. Chances are your business is struggling right now as prices drop, inventory drops, and activity drops. I feel for you guys up in mono. Now, there are multiple markets where prices are still going up. So we're going to focus on the top 5 where prices are rising the fastest. Kicking us off at number 5 is Santa Cruz. Santa Cruz is up almost 6% year over year, from under 1.1 million to over 1.1 million. Look at the amount of available homes. It's dropped almost 20% year over year. This has been common for the Bay Area with Santa Cruz, and San Francisco has been even worse, which is hard to believe. But going from almost 600 homes available in a given month to under 500. So this is a gigantic drop in inventory, and the price is just inching up as a result. But surprisingly, even with little inventory and prices going up, the amount of homes sold is going up as well. Very interesting for Santa Cruz. Next, we're going to go up to the Oregon border with Siskiyou. This, if you're an industry pro, is what you want to see. Green across the board, where you have prices up, inventory up, and homes sold up. Siskiyou has been a hot market and on the list of rising counties for, I think, the past 4, 5, 6 months that we've been doing this. So Siskiyou is becoming more and more famous as the market just continues to take off. Coming in at number 3 is Sutter County, right up here, which is another great market if you're an industry pro. As prices are rising, available inventory is rising, and the amount of homes sold has basically stayed unchanged. But you're seeing consistent growth in this section of Northern California as well. Number 2, San Francisco. And again, this is either a great market or an absolutely terrible market. I would tend to say that this is a very stressful, difficult market to navigate for renters, for homeowners, and for industry pros. You've seen a gigantic boom in price and a gigantic drop off in inventory. These two numbers feed into each other. So as inventory falls off a cliff, you see prices rise. And it's pretty common. But it went from 1.359 million to the median price now back up to 1.5 million, which is tough. If you're a real estate agent or a lender, you love seeing those high prices because you make a percentage on them. But you are also seeing the amount of homes sold and the amount of available inventory drop off quite a bit. So San Francisco is a booming market in terms of price. It's a really difficult market for the other two measures. And taking the top spot again is Imperial County. So down here by the Arizona and Mexico border, again, double-digit growth, 12.1% year over year, from 353,000 to 395,000. So the inventory is not really changing, but as prices continue to inch higher and higher, you are seeing a big drop in the amount of homes that are being sold. So this price is probably going to start to normalize and then come down again, because what you're seeing is that the market has gotten a little too hot and now homes aren't moving. So what I would expect to see in Imperial County is this 395. I don't know if it's going to go above the $400,000 mark, but I would see that as the amount of homes sold slows, inventory should rise and prices should start to fall again. But right now it's taking the top spot 2 or 3 months in a row. Now, I want to take a look at what's happening in the 5 biggest markets, which really drive the data for the entire state. Starting off with Orange County, where I live, it continues just the slow, steady growth month over month over month over month. 1.42% in the March period. So from a little under 1.2 million to a little over 1.2 million for the median price. Inventory continues to tick down. There's been fewer available homes for the last few months. So about 3.61% drop in inventory for Orange County. And then the amount of homes sold has dropped in kind as well, down 2.4%. Now, Orange County and San Diego County are the only 2 out of the 5 largest counties that are still getting price growth. If you look at San Diego, it's basically even. Orange County and San Diego both have price growth year over year. The 3 largest counties, which we'll get to next, are all negative. And even if you look at San Diego's price growth over the past year, it's basically flat. So from 903,000 to 904,000 from last year to this year. Inventory continues to decrease, which has been consistent for San Diego the past few months. And the amount of homes sold is inching up, which I would expect to reverse. As the inventory drops, you should see the amount of homes sold start to cool off as well. At number 3 is San Bernardino. It's a 2.31% drop from 549 down to 537. Inventory has dropped a lot. So not only is it 8.6%, but if you look at the actual numbers, it's almost 700 fewer homes available in that market this year compared to last year. San Bernardino is one of the few counties where there's actually building activity. So this is twofold, representative of two different things that are going on. Is the amount of available existing homes has dropped, and also the amount of new construction has dropped as well. And then along with that, the amount of homes sold is down 2.23% as well. Similar story for Riverside, down 1.25% year over year, though the price is a little stronger than the average median price for San Bernardino. But similarly, you have I think it is over 700 homes fewer available in Riverside this year compared to last year for similar reasons as San Bernardino. And the amount of homes sold has dropped as well. Again, this is a tough market if you're a housing industry pro, but it's also difficult if you're looking for a home for yourself. So even as prices start to drop, the amount of options that you have to choose from is dwindling, and I don't see that trend reversing anytime soon either. Well, number one, by far and away, is Los Angeles. It's only down 1.25%. I feel like that, or it seems like that price is starting to stabilize a little bit, but it's gone from 909 down to 898,000. Similar story with the other major counties throughout California. Inventory is down, and the amount of homes being sold is down as well. So these three counties, the three largest by far and away in the state, are negative across the board. Buckle up, guys. Now, looking at the data for the state of California as a whole, median price growth year over year was stronger about a year ago. But if you look at these past 10 months, it's been a little bit positive, typically under 1% or just a little bit above 1% year over year growth. And now there's 3 out of the last 12 months it's been negative. So you're starting to see prices hit that top of the roller coaster, and then we should start seeing more substantive declines soon unless inventory continues to fall. So when you look at the available homes column here, the year over year growth was insane about a year ago. So 30% inventory growth year over year. It's an incredible number. But as you just see, this number has been dwindling, and it's finally officially gone negative. So there are fewer homes available on market today than there were a year ago. And the amount of homes sold, this has been sort of a hodgepodge going back and forth as to whether or not the actual transacted activity is stronger or weaker than the year before. But you had seen this 4-month period here where it looked like, okay, maybe prices are getting low enough, or people are getting more comfortable with the prices to where they're starting to see more activity. And now maybe not again. So 2 out of the last 3 months, the actual transaction activity has started to decrease again. The consensus viewpoint around here has been that prices are going to fall about 30% by the time we finish 2030. So take whatever county you're looking at or neighborhood you're looking at currently, subtract out 30% from those prices, and that should be the price target by the time we hit 2030. And what you're seeing in the data doesn't reflect an overnight crash, and that's never how real estate markets move. But what we are expecting to see is stronger inventory, and then prices going down, but homes sold going up as a result. As more inventory comes on the market, as prices go down, activity tends to increase. And for those of us in the California housing industry, that's good news. So if you hear the words crash or this market is falling off of a cliff, just know what that means. For those of us who are in this community together, this is good news as long as the market doesn't crash too hard or too fast. And if you're looking for an actual community of people to be able to talk to find out what's working, what's not working in this current market and in the markets to come, we'd love to have you join the waitlist for our community. There will be a link down below, so feel free to check that out. Also, we love talking to people. So in the comments, I try to respond to every single one. So if you have any questions, if you have any comments, if you want to know predictions about a specific market, or if you want to push back on anything that you've heard today, please let us know. Love to engage. But thank you so much for spending the time talking with me today, and we'll see you in the next one. Thanks.